Okay, folks, welcome back. Weekly review, May 3rd, 2019. Economic calendar, general commentary, dollar index, fiber, and cable. Okay, so the economic calendar going into next week. We have a bank holiday on Monday, GBP, and FOMC speaker at 10 a.m., New York Open. And we have Bank of Canada speaker high impact at 1:45 p.m. On Tuesday, we have economic forecasts and IB PMI for New York relative to CAD. This is filtered only on Eurodollar, pound, and the Canadian dollar and the dollar index. Medium impact FOMC member speaking at 11:35 a.m. for the dollar, and then another speaker at 12:30 GBP. On Wednesday, we have a bank holiday, and we have a speaker again on London Open for GBP. ECB monetary policy meeting accounts, medium impact 7:30 a.m. New York Open for Wednesday for Eurodollar. And we have another speaker at 8:30 a.m. for the dollar index. On Thursday, for Canadian dollar, we have trade balance and Fed Chair Powell speaks at 8:30 as well, and PPI for the dollar index. And Treasury currency report is tentative on Thursday. On Friday, the British pound has GDP and manufacturing productions for the London Open. And then we have at 8:30 a.m. Canadian dollars, employment change, unemployment rate, and CPI for dollar index and core CPI. And then we have a member speaking at 8:30 a.m. So Friday should be a really volatile day for Canadian dollar or the dollar CAD pair. All right, so I'm not going to spend a whole lot of time this week on the charts because it's non-farm payroll. We had a pretty eventful Friday relative to price action. So I want to see if there's any kind of follow-through on Monday, or if there's a reluctancy on the part of price to follow suit what it had posted on Friday's numbers release. So the daily chart here on the dollar, you see here we have a nice, really beautiful down close candle, but we're still inside this range. Okay, so I'm not really excited yet, even though Friday was a really nice movement. It could just have been a fake out move, and really dollar index could still turn around longer term and go higher. So I'm not trying to pick a top in the dollar. Okay, I want to see it break down more than it has here to kind of like qualify a real tangible turn. Just because we faked out above these equal highs I've been looking for, this right here is, to me, not very convincing. I would have rather seen it come all the way down and not need to come back up ahead of non-farm payroll. I would have been much more convinced that this was a false breakout longer term if we would have just continuously eroded and then made a run for this low here. So I'm mixed. Okay, I'm neutral dollar. I don't know what to expect until we see what we see on Monday. Okay, so as a general rule of thumb, you only want to add that to your notes. When we have a non-farm payroll Friday, the next Monday or next trading day, you want to sit on your hands and just wait and see what the market wants to do, because it has all weekend to digest the numbers report and build all kinds of sentiment, and the market's going to react on the following week post non-farm payroll. Sometimes it does have follow through. Other times, non-farm payroll is a fake out for the whole entire month and kind of like acts like a Judas swing, and the market does the opposite, the rest of the trading days for that particular month. I'm not stating one way or the other here. Like I said, it's too early for me to tell, so I'm going to let my Monday analysis build a little bit more, confidence behind what side of the marketplace is going to seek. And Monday might not do it either, but that's just a general rule of thumb for me. If we see it break down further, we'll see a liquidity run below this low here, and our eye goes right into this bullish order block. The reason why this bullish order block is significant, or why it's impactful for me, is because it brings with it a fair value gap in the form of this low to this candle's high. Now, originally the fair value gap was here, as we noticed and mentioned at the time of the recordings, at that juncture. So if we traded deeper, that's fine. We went to consequent encroachment of that fair value gap, but we still have an unfilled range in here. So it could come down one more time, hit that, and then reject. We could see it run down below here, fill that gap entirely, and then make it a run higher. That's one scenario that could happen. I don't know just yet where we're going. I'm not convinced that we made a long-term reversal. Let's just put it that way. So again, we could be trying to trap traders in here thinking that we've made a top, and non-farm payroll really sold that narrative, and everyone's going to want to dogpile over the weekend with bearish sentiment, and we'll see what that does going into trading on Monday. But if we do break through and get through this order block, the next liquidity pool on the sell side is right in here. And if we get down below that, I don't think it's a matter of just going down there for a run on stops to go higher. I think it's really turned the corner if it goes below here. On the hourly chart, you can see we have a buy side liquidity pool, relative equal highs. This vertical line is just delineating the beginning of the week. We had a nice rejection here, running relative equal lows. Market rallied up, trade off of a bullish breaker, found support, rallied up, cleared the buy side liquidity on non-farm payroll. So that run here was non-farm payroll, and we've since traded lower, running liquidity below here. So watch this. We have these down close candles, and then we have this big run here. I like this series of down close candles, and I really like the fact that we have this portion of price action right here. So to me, I would like to see it come back down a little bit deeper, and then once we get to the top of this candle here, I think that that may be something of importance, at least on an intraday basis, that may flesh out to a larger importance. But for now, I still see equal highs here. I'm not really convinced that they aren't interested in running that. So I'd like to see it come down here a little bit more, close this in. It would be a rebalance on a volume imbalance. Even though we had one pass through on the upside, yes, they offer price on the upside, but not specifically here on the sell side. So I'd like to see that be offered. Okay, so if we trade below this low here, then obviously I have to, revisit my analysis. But right now, I just want to see what we do. Are we going deeper on the range? In other words, the range is low here and highs up here. So we're really in an optimal trade entry for a nice discount array. That is the volume imbalance that I'm looking for a discount array. Now, if we break the range here, then again, like I said, it brings with it more requirement for data. And then the analysis will come after that. But right now, we're still inside this large trading range, and nothing has really significantly changed. So I'm not convinced. I'm not sold on one side of the market yet. Okay, bullish or bearish. So this is the reason why I'm neutral on dollar. And you can see a little bit more refinement in here. You got one single candle here, which also just below this volume imbalance and this low. So this low, this high, we're right in basically the middle of that. So we traded right to consequent encroachment. So to be honest with you, I wouldn't be surprised if we open up and try to make a run higher. That would be completely what would upset the bears, and it just looks like they gave it too easy. They ran the stops, and yes, it was a nice sell-off, and you saw what I was able to do intraday before the lead into non-farm payroll with the euro dollar making a low resistance liquidity run. But after the numbers release, you really don't really have any clue what they're going to attack, and it just feels like they came down deep enough to clear these stops. Consequent encroachment of the gap between this low and this high, one single liquidity void. So to me, we also traded into a breaker. We have a low, high, lower low, find the high in the middle, there's your breaker. Like I said, it'll be interesting to see what we do on Monday. Moving on into euro dollar. Euro, we traded down to a bullish order block. We have a buy side liquidity pool here, equal highs, and then we have bearish order block. Yeah, nice little reaction at that level. Again, still inside of a larger trading range. We're bumping up at the bottom of the candles here and here. That's all we're trading at right now. So it needs to get back above this high. Like I said, if we give back all that range, then we have made a long-term low, at least for the year, that could be traded for upside expansion. But right now, it's too early for me to tell, and I'm not trying to push it. And I'm trying to be smarter than the average person, and I'm not trying to gamble because I don't trade like that. I want to see significant evidence to support a long-term reversal. And then and only then I'll go in and probe it the first couple times. I'm not interested in catching the first one. So the turn, they can get the smart money reversal. They can have that. I'm looking for the low risk buy. Okay, and that's what I'm looking for if we meet a long-term low, if we are at all. This could just be a return right back to the bottom of these candles where the bulk of the volume is, and all of this could just simply evaporate, into this coming week and go lower. And I don't want to sell the narrative of a bullish euro or a bearish euro here. I don't know. So I'm waiting for Monday's trading to get more insights. All right, so the hourly chart, we have buy side liquidity pool here. A little bit of a void that could be traded up into. Just a little bit because it's the low here, not all this. Just this low. So it could run those buy stops here and then look at this area right here. That's a volume imbalance as well. And we go down to a 15-minute time frame. You'll see a better view of it. Relative equal highs, equal high, buy side liquidity, fair value gap right in here. Okay, so this candle's high or the open, and the range high is this low, and this candle's open. So you have one single candle making that pass through that price range. So if we go above the liquidity pool above these equal highs and this high here, I'd be interested to see how we trade right at this breaker. Okay, so it's the high, low in between two highs. Okay, a higher high than the previous high. Find the low in the middle. We could trade up to that, clear the liquidity, hit the breaker, fill the fair value gap, and then roll over. So if we go through this buy side liquidity pool and trade up above these equal highs, that's the level I'm looking for. So basically 112.80. Okay, so institutional level, what we do there will be significant in my mind. If we sell off from there, I'll trust that move. I just don't see. I'm not comfortable buying it. Let's just put it that way. And you have relative equal lows, liquidity pool, and non-farm payroll release, and the expansion there. So even though it was really nice intraday seeing that, it's really not all that big of a deal. 15-minute time frame, euro dollar. You can really clearly see and respect the volume imbalance here. It's no candle bodies. It's just a gap and wicks only. So they're going to want to, at some point, they want to come back down and rebalance that and offer sell side delivery. And you can see a real nice low here that if we get above this and we get some kind of expansion, that would be it. I don't like that. I'd rather see it stop at the breaker. But if we expand into that, we also have a volume imbalance as well here. So all of this range down, no bodies of the candles here. Your platform may show one single candle passing up. It's still the same thing. Okay, so we'd like to see it come back up and fill this in with buy side delivery, which would be buy side above a run on liquidity here. So buy stops would be ran out, buy side would offer, come to this low here, fill in this volume imbalance, and still be inside of the breaker because the breaker's all of these down closed candles. See that? Down, 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 down. So this entire range from here to here is the breaker. So it can trade all the way back up and hit this low, and it would be still fine relative to the 15-minute time frame euro dollar. Moving on into cable. Really nice move off of this order block and volume imbalance we talked about on the daily chart. Wish I could go back in time and say, I want to buy it here. Instead of saying, I don't know if it's going to want to go up higher first before it wants to go lower. But you can see the apprehension I had with taking any further trades or holding anything more short, the results of that. So we had a really nice swing point low form relative to bullish order block, volume imbalance. This area here, okay, so we have a daily fair value gap. Okay, I've seen all this stuff lately, Michael. You got all this intraday activity, and I'm not interested in that, son. I want to get in here and trade some position trades and some swing trades. I'm not interested in that day trading stuff. That's for those action hounds. I'm not sure whose accent that is. That's just the inner dialogue I have when I'm looking at my reviews in hindsight thinking, I know there's a lot of people that don't want to day trade and they're so tired of hearing about it. But this is one more evidence to the fact that what I teach still exists on the higher time frame charts as well. So we had an example of it with cable on the sell side, which is here. Okay, so we had a daily SIBI, sell side imbalance, buy side inefficiency. Consequent encroachment hits it here. So now we have a BISI. Okay, so we have a buy side imbalance, sell side inefficiency, defined by this candle's high, this candle's low. So we have one single void of sell side delivery. It's all buy side only. Okay, so you split that range in half, and there is your consequent encroachment there. Okay, and we'll take a look at that when we drop down to the lower time frame. But look how beautiful that is. It opens, trades down, non-farm payroll release, and then hammers it, dries it up. We have a buy side liquidity pool here. If we show momentum above this level here, our eyes go to these relative equal highs here, and we'll be looking for 134s. Too early to tell. It may not even get there. Again, it's still inside of a larger trading range. But if we run above here and show expansion, this is the next logical area where large fund liquidity would be. Okay. Right now, we're just watching what we do here. Moving into an hourly chart, you can see the range. This is a balanced price range, all of this consolidation, and we left it. Okay, so I'm using the top of that range, measuring this high to this high here, just to get a range, and the 50% level is here. So anything above that's premium, anything below that is discount. We trade down into optimal trade entry, sweet spot here, 70.5. We have a fair value gap, beautifully traded back into as a discount array below the 50% level. So we have a discount array in the form of a fair value gap, optimal trade entry overlap, and it is a run on liquidity here. Further expansion, we see target 1 here, and obviously, as I mentioned on the daily chart, where the longer term buy side liquidity pool would be resting. On the 15-minute time frame, you can see that liquidity pool here, sell side liquidity, relative equal lows. 30 pips below that, perfect run into non-farm payroll. So I have a 30 pip run, previous day's low, expansion down, Judas swing, fair value gap, and bullish order block. Which order block do I trade, Michael? You Southern folks, don't take any offense to that. I'm actually from Southern folks, so don't be offended by that. So, which bullish order block do you buy, Michael? Well, you look at the one that has a fair value gap just above it. They're the ones that's going to be high probability. Which bearish order block do you sell at? The one that has a fair value gap just below it. Okay, so every time you get a question, okay, these are those moments where it just drops out, it falls in your lap, and you go right to your study journal and say, okay, Michael just answered that. How do I know which order block to buy? How do I know this and how do I know that? The next question you got now, well, just tell me right now, which one do I trade off of, the wick or the body? Well, if it's a short wick, you trade the body. If it's a long wick, you use the top of the wick down to the body. And then you could use consequent encroachment between the top of the wick to the open if it's a bullish order block. Or if it's a bearish order block, the bottom of the wick or the low of the candle up to the body, which would preferably be a open. So you want to see the low up to the open. In that range, you're going to split that in half. That's your consequent encroachment. Okay, if it has a long wick. If it doesn't have a long wick, you're just going to trade at the open of a bearish order block. Okay, so there you go. You have your answer. Go to your study journal, write it down. If you didn't catch that, rewind the video. Okay, you'll hear me talk about this several times in other areas in the mentorship, but it's meant to be discovered. Okay, I don't want to lay it all out there because there's so many people just wanting to take one little thing that they've been waiting for and then run into live trading, and you're not ready. Okay, so just understand there's so many other things, and you get all the answers if you just pay attention. So here's the 30 pip run below the equal lows, beautifully delivered to an order block with a fair value gap. And we have relative equal highs here, buy side liquidity pool here, and they run right on through all that. Non-farm payroll number released again here. This little dotted line right here, okay, all that was is me transposing a 50% level of the total daily range, or I'm sorry, the weekly range. Let me show you what I mean by that. If we go back to this. What I'm showing you is this high and this low. Okay, so prior to this move on non-farm payroll, this was the intra-week and intra-week. I'm sorry, this was the intra-week high and this is the intra-week low. So this range, if you measure that, this is the 50% level. Now, if you notice this level for 50, okay, this is this high to this high here, that range, because it's a balanced price range and I'm measuring this expansion up. So all of this range has now been referred to with this Fibonacci. All I want to show you is that it was offering a discount array here. Now the 50 level I'm showing on a 15-minute time frame is literally the low of the week to this high here. Okay, same thing. Not measuring from the top of this trading range, it's measuring from the low up to this high. So there's going to be a slightly lower. So as you can see, this high to this high here, the 50 levels here. But if we drug this Fibonacci down, that would lower that 50 level a little bit lower. Okay, and that's why you're seeing this line here drop right on top, basically, of that run back into a fair value gap and a bullish order block. But it's trading below the 50 level, which still, by all definitions of a discount or premium market, it's at a discount. Okay, so no matter how you slice that, this was a really nice run into a discount array. Confluence, 30 pips run below equal lows, previous day's low. Just a really, really, really nice. If this would have been any other day but non-farm payroll, man, I would have been all over this. This would have been great. But it's non-farm payroll. So I just did a little bit of a scalp, anticipating what they would be running for the numbers release at 8:30 New York time on non-farm payroll, and you saw all that. So again, just a small little pound of flesh just to finish the week. And yes, I'm absolutely done giving all of that that, I guess, showing off on Twitter. I know you've heard me say this several times, but I had to do the non-farm payroll just before I close it all out. So that's it. All right, folks, I have a lot of things to take care of. My sister's getting married, so we have a practice session to take part in. So I have to get out of here and cut loose. I will be following up with you all next week relative to Monday's trading. If there's anything that I gleaned from that action, I will send it by way of a text format post to our forum in the May section of 2019 weekly commentary. It will not be a video, okay? I have too many things going on Monday to sit down and do any video production. So whatever I get from Monday's action, and if I don't get anything, I'll just send you a tweet and let you know we're waiting on Tuesday. Okay, so but right now, minimum, I'm waiting for Monday's price action. Okay, until then, enjoy your weekend. Be safe. I will talk to you all next week.